Okay, week 31, outlook number 2. Apparently, this is highly anticipated because of the price action that has occurred yesterday and today. So, let's go ahead and get some clarification on the analysis. So, starting off with the British pound futures, we discussed the last time that there were 3 possible scenarios we were looking at. Well, it looks like scenario number 2 is the one that is currently playing out, as we have avoided moving into the bullish area of interest here, and we actually are pulling back into, or it looks like we're aiming to pull back into this price gap, which is a part of the bearish, the first bearish scenario, which is scenario number 2. So that's what we're looking at here for British pound futures. And this makes sense because we do have action mitigation. We do have the liquidity draw. So if this is the model that's playing out, it would only make sense that we have some sort of price action to set up continuation of selling moves. And so because we have this action and mitigation here that created this price gap, we have relatively equal highs. It all just makes sense for price to pull back here. Now, what also could be occurring is, I don't want to project too far, is that we could get a response here, run this low, because we have basically created relatively equal lows here. So we've set up some sort of liquidity pool, which just so happens to rest right above this area of interest. So this could be an opportunity, or this could be a play for sellers to exit their positions after mitigating or activating these sells here at this price gap, run this low, and then the buyers get in, and then we run higher. But I'm not going to project too much. As of right now, the scenario as it stands, it looks like scenario number 2 is playing out, where we're pulling back and we're looking for mitigation of 50% to 100% of this 4-hour price gap, aiming for these relatively equal lows, liquidity point, and possibly playing into this area of interest here. That is what we're seeing. And it would be really, really awesome if this does play out in this way, because then we could possibly ping pong the market here, in which we'd be looking for sells into buys, and then we would be looking for price to continue running the bullish price action up towards this liquidity point here, and then ultimately these relatively equal highs to then give the full-on bearish move that we are looking for. But we have to play what the current price action is as of right now, but that's my my thesis for this pair as of right now. All right, moving on to the well-anticipated NASDAQ chart. Okay, so what we have is continuation of this bearish price action. Almost a little bit of FOMO here, because I'm like, dang, I really had like the position. I should have held this, but that's neither here nor there. It's just hindsight's 2020, right? I definitely did have the target of 27,000, but I decided to play conservatively, obviously because this is a bullish, or we were a part of a bullish run, and I was trading counter trend, but I had in the back of my mind anticipated that this was going to convert into a range, and we just full on converted into a range. Speaking of the range, well, as you can see, I currently have the range that I've identified and marked out. Now, I'm going to do something a little bit different here and go a little bit more in depth into how I decided this is the range. I usually don't do this, and I actually will urge you guys, if you have been following these outlooks since 2025, to go back in this area in the outlooks, or go back and watch those outlooks, because this is just, all this price action here is just continuation of what I was analyzing here and how I notated basically the range low, or the beginning of this range from here. And so let's see, if you go back and watch those videos, tell me if I'm wrong or right, all right? So anyway, the last high that we had was here, which was the all-time high that was created back in October 2025. So that was Thursday, October 2025. And ultimately, this high converted us into a bearish range. So we actually ended up, after this full-on bullish run here, we converted into a bearish range because we ended up breaking structure here. I'm sorry, a bullish range because we broke structure here. And then once we had that bullish range, we then pulled back, blah, 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 did all this playing around, and ultimately ended up forming a break of structure at this low of this, or this liquidity point at this low of this range, right? Which is right there. So we ended up getting a break of structure there. And so that transitioned us into a bearish run, which I talked about way back in 2025 in the outlooks, and we analyzed and analyze the price action that happened there. So anyway, we got that break of structure, and that converted us into a bearish run. And so that bearish run ran all the way down to here. Now, this is the most critical area because this is our transition point. Not a technical term, but it is the area in which we transitioned from bearish price action into bullish price action. So why do I say that? Because we transitioned from a bullish range existing from wherever this was up to this point, pulled back, then we ran that, then we had a bearish range existing from this high down to this low because and the reason why we transitioned from a bullish range to a bearish run to a bearish range is because if we're tracking the highs and lows, we have high, low, high, low, high, unwillingness, break of structure. That break of structure solidifies this as a liquidity point. That liquidity point then transitioned into a structural point once we broke this all-time high here. And because we broke that all-time high here, we then transitioned into a bullish run. So that rendered this low here, specifically this point here, into a structural point. Where is it? Okay, yeah. All right, so this is my structural point now after transition of the phase of the bearish range into the bullish run. So this is now my structural point. And because we had that structural point, once this was rendered into a structural point, once we broke the all-time high of the bearish range effectively, which was this high here. And so all of this price action is a part of a bullish run. So we have a very expansive bullish run here. And once we transitioned, like I said here, after we got that break of structure, we then transitioned from a bullish run into a bullish range. And so the bullish range exists from a structural point up to a liquidity point. And so that liquidity point is the all-time high here, but we didn't get conversion of a bullish run into a range until we broke structure here. Now, why is that? That's based off of the structural actions. All of the structural actions, if you go back in the previous outlooks, I said, hey, we got a liquidity draw here. So all that did was shift the structural point. It didn't cause a break of structure. It just shifted the structural point. So we had a liquidity draw here. This was our last structural point. Then we had a liquidity draw of this structural point here after it got shifted. And then we had a liquidity draw here of this structural point here. And then we finally had break of structure. But notice how all of these liquidity draws gave very strong moves to the high side, but failed to break higher. So that's just something to note here for possible pattern recognition when looking for transition of runs to ranges. So we had liquidity draw, and then we got the break of structure. And notice how on this, once we got the break of structure, we failed to continue higher at all. We had just a slight pullback, and then we ran lower. And so because of that, this is our point in which we can call the transition from bullish run to bullish range. So our current range for the NASDAQ exists from this structural point up to the all-time high, which is this liquidity point. And as you can see, we are moving very, very quickly towards equilibrium of the range. And then we will look for possibilities on both sides in the premium and the discount side of this range for possible buys and sells. So I hope you learned a lot from that. That is more than I was willing to give, but you're welcome. That is how I read these ranges and runs. All right, so moving on into the the Dow Jones. The Dow Jones is also just doing exactly what it needs to be doing inside of the range. Similar price action, similar things that we have here. I'm not going to go over that as far as how we picked out this range. I believe we did it before. If not, I want you guys to do that yourself. But all in all, this price action is confirming that we are in a range. As you can see, we're having lots of strong unwillingness. We're building up a very large liquidity pool right here above these highs, which is very interesting. But we had a very strong response from whatever the heck was up here. This is just raw price action, I would say. And we ended up running this low here for continuation of sells. We did have this inefficient pricing. So we had mitigation here that ran this high, which is cool, but and it ended up failing and price decided to roll over, which is also totally fine as well. So anyway, all that to be saying that we're just playing inside the ranges now of the Dow Jones and the NASDAQ, and then we're waiting for British pound futures to give us the real move over time. But don't get caught up in all the nonsense that people are talking about of like, oh, the market's going to crash and all this. It's all a part of the price action, it's all structured. Don't want to sound like a crackpot here, but it's all structured. There is reasons for these moves. Look for the inefficient pricing, capitalize off the inefficient pricing. It happens every single time. All right. Week 31, outlook number 2. Peace.